Hi everybody, can you hear me? Everyone doing okay? Oh, hold on a second. Show my screen. So early in the season, I would call this like, I don't know, preseason. Hi Dennis, Richard. We had a little trouble with the exchange from the quarterback to the halfback before I hit the line. How are you, Blake, Stell, Paulie, everyone? So we did you guys get in here okay? I know that you have to, leave one and log in again. Anyway, Warriors, let's have a great day. Good. Let's have a great day. So one of my best ideas, which, started last week with gold at the 61.8. Let's see if we have some continuation to the upside. We really ran into some resistance yesterday in the gold and haven't been able to penetrate it yet. Okay, so this 1208 area, if you look at it, it's right here. So the bears are going to try and make a stand, because if you start pressing these highs up around 1208, it's not that far away, or even the first high up here at 1214, then the bears that are trying to defend it, and did defend it successfully here, but only were able to take it back 61.8, they're going to be pressed to cover. And first target of equality, something like this from here, is 1235. So as long as we don't start closing back under 1190, actually, I think it should have a hard time getting back under 96. This was a pretty important 93 to 96, pretty important pivot. Stock market's firm again. I think the S&Ps have a chance for a 3 drive. Russell's the only one really collapsing, but the NASDAQ has turned into the relative weakness. But here's the S&Ps. I don't know what would stop it from making a new high here. Okay, so they tried to make it look like we might have a failing rally. But at new highs, it does not look like. On the 4 hour, we're going to confirm. On the 1 hour, let's take a look. Maybe not. Okay, so we'll see here. As you can see, look at this structure right here on the 1 hour in S&P, and compare the muted rally in NASDAQ. Okay, the S&Ps are already here. NASDAQ is not. So Amazon took some pressure yesterday. I don't know if people didn't like that they're giving people a raise, $15 to $15. So let's see, that's $2,400 a month. Yeah, try and live in California on that. Anyway, so Jeff Bezos is trying to be a humanitarian by giving people, I think, a $5 raise. But the NASDAQ is definitely the weak sister. Of course, the Russell has really been getting completely annihilated, right, from the false breakdown, false breakout to the failed breakout. Okay, so from 69 to 64. Pretty good trade. Thought we might be able to make it down here. You have to sell all rallies in the Russell. I don't think we're going to see these highs for a long time. That's my view. Let's take a look at some currency action here. Starting with the euro. Trying to bounce a little bit here. I kind of like this 115 area, but I'd like to see it tested again. I don't like the RSI setup here. We have a 22 reading at yesterday's low around 1502. It's a little higher than this one, but I'd like to see a new low in price right here, which could happen. I'm starting to think, since we're getting to be later in the week and we have the NFP on Friday, that Friday may be the inflection point for maybe a turn in the dollar. So I'd like to see dollar strength into the NFP and then look for a turn there. Similar situation in Dixie. We have a 1, we have a 2, possibly a 2 drive. This could be a failing rally off this first break. Yen looks a lot like it, but I wouldn't be surprised to see maybe one more shot up. Yen has recovered. It looks a lot like the dollar, but actually looks a little stronger here. Maybe we're going to challenge recent highs, because the last highs, again, were confirmed on the 4-hour, kind of on the 1. So if we got a new high over this high in the yen over 1406, I think we'd have some non-confirmation. So maybe a good NFP number is going to set up fades in US dollar yen and the Dixie and the euro. That's kind of the way it's looking to me. Crude, you know, normally if there wasn't all this geo stuff, you know, I'd be looking for reasons to short it. Here's 1, 2, 3, pretty classic. Too much short-term momentum for me to do it though. Up here, these readings are pretty high. Yeah, you're not going to see a market top with an 86 RSI reading here. So that's kind of my take here. Let's see what's going on with the yuan, because I never believe what the Chinese say, and they came out and said they weren't going to weaponize the yuan. So that makes me think they're going to weaponize the yuan. Not that far away from new highs. Still think that the lira, you know, lira might be a buy. I still think this is a confirmed high up here and that we're going to make another run. So some of the things that were bothering the market have settled down for the last several weeks, maybe a month or so. And I think they may reemerge. And 2 of those candidates would be perhaps the yuan making a new high, which is a new low, and the lira running into some issues again. So I think that's pretty much a rundown. I just want to, guys, show you euro pound failed again from this 89.20 level up here. It's been there several times. I thought we might get through it. This was the news bomb about, you know, there's going to be some support for May. So again, I think I want to flatten it out. And I was also thinking about it. You know, it wouldn't be the first time if euro pound flushed the low here to take out the stops of everyone who's been buying 38.50, 61.8, 78.8. But you get closes over 89.20, the picture changes. So this is something that's also on my radar going forward. And we have an excellent guest for people that I'm going to be curious. Alok Jain is going to be with us. His handle is at Weekend Investing. So I kind of get a clue from his Twitter handle that he does a lot of his work about what he's going to do in the markets, kind of like what I teach on the weekend. Or if he's a weekend investor, he's got to be trading crypto because it's the only market open. Okay, Dylan's talking about the 10-year. It has a bullish flag. NASDAQ has a head and shoulders. Okay, from your lips, Dylan. Okay, 10-year has a bullish flag, 10-year yield. Take a look at that. So, you know,
hey, Coach,
buddy. Yeah.
Hey, I just wanted to let you know we do have ADP numbers coming in.
Okay, why don't you take over then, Blake?
Okay, and then we can look at the 10-year.
Okay.
After that.
Okay, buddy.
Yeah, just good morning, by the way.
Good, yeah. Okay.
Yeah, a little bit of a transition. It's not our normal schedule, so we're just
well, it was our first home game under the lights, and it was an opening play, and the handoff was a little sloppy, but man, we'll just make a few adjustments, and we'll get this machine running like a locomotive again, buddy.
So just a little heads up, we got ADP numbers that are coming out here shortly, and the market's looking for 184,000 jobs to be created on private sector jobs. Prior was 163,000, so we're expecting a little bit bigger of an ADP number. Now this is, the ADP is really over the last several years has taken the shine off the NFP somewhat, but you know, instead of everybody focused specifically on the BLS numbers. I remember when the ADP numbers didn't really matter, you know, because it was such a new number and people didn't look at it scrutinize it that much. But now we're you know, paying a little bit more attention to it. Now, I think the risk is that the number comes in a little weak. I think employment is starting to show some signs of weakness, and I'm not sure if this month is going to be the same, or last month rather, but this month's number. But we'll be paying pretty close attention to it. The euro dollar is you know, I have to say the news last night, and the reason why risk is higher this morning, you know, one of the reasons, and you know, people are just like, oh, you know, here we go, S&P is up again, you know, up to near all-time highs. Italy was supposed to put out a revised budget overnight, and that announcement came in Asian trade, and then at that point the S&P spiked higher last night, and this would be, I guess, it'd be like right here last night. This is when the S&P spiked higher, and so we're just getting some continuation of that. But the euro has actually peeled off a lot of its gains since last night, and the euro's back to where it started. You can see this is the move when that happened last night, and then we've already given all those gains back. Now, if the number is the ADP number comes in a little weaker here in a minute, we could see the euro, you know, just continue this consolidation. I don't know if we're going to break 115, but you know, I'll tell you what, if we break 115, you're going to have a lot of sore butt euro longs coming in. You know, they're going to be some pretty upset people if we have like some blowout number out of ADP. The pound's, you know, re-challenging this trend line once again, and you know, we don't want to see below this 129 and a quarter. If we get below that, it's going to be kind of ugly. But I'm going to take it over to the dollar yen, because the dollar yen, this is why the dollar yen actually spiked up last night. Here's the hourly. We spiked up last night following that Italy news, and you know, here we are once again. We're just kind of holding up because S&P futures are higher, but we're going to be watching the dollar yen through the ADP numbers, which will be out in approximately 55 seconds. So, and gold is weak. I don't know if you've seen how weak gold is, Dale. But man, gold is it's not following through from yesterday's rally, which I'm surprised. I'm actually surprised gold is not doing so well. So, all right, heads up, guys. Here's the ADP number. You'll see it here first. Let's watch this line right here. Okay, this is via Bloomberg, so you'll see it pop up there.
I like what I have to pay for my Bloomberg.
Yeah, you like that?
Yeah.
It comes out of my ass every day.
I don't like it anymore.
I don't.
I'm kidding.
It's expensive. All right. Oh, good number. 230,000. Wow. Now the dollar yen. Let's see. Any revisions? Dollar yen spiking up. It's a decent number. No revisions yet. Oh, 168,000. So an upward revision. So, you know, overall great numbers, great ADP numbers, really. Now the dollar yen hasn't really responded. I mean, it's gone up a little bit, but nothing huge. Anybody who's long the euro though right now is going, oh no, you know. So the euro, in my opinion, is likely to start taking out these stops below 115.30 here in a few minutes. You know, that's the risk. I mean, you know, you got people that got long the euro in Asia, and they're probably going to get stopped out shortly. S&P futures haven't done anything. They're just kind of sitting here. Dollar yen's not really doing it much. I mean, the dollar yen pushed up a couple of pips, but, and you know, the thing about the dollar yen is we had this is a dark cloud cover set up with a candle, and we were heading lower in Asia until that Italian news came up, and then then it bounced back. But there's still a lot of time left in today. I wouldn't get I don't get too super excited about daily candles until we get late in the late in the session.
Yeah, you don't know what kind of candle it is till it closes.
No, anything can happen at the New York Open. Once the New York Open happens, that's when things get a little bit more interesting. Italian Deputy Prime Minister Salvini says the only figure that is already certain is the 2.4% deficit GDP target for 2019. So, are we not going to get a revised budget to 2%? Because that's what the whisper was, or the news was last night, which is interesting. I'm assuming the Euro's not going to take super kindly to that news.
Hey Blake, I personally think it's going to be a success if it stays at 2.4 and not higher.
Yeah, but did you see that? Well, you didn't. You were asleep last night in Asia. But did you see why the euro spiked up last night?
Yeah, I read the headline, but I don't know how accurate was that. I mean, I didn't read the details, but who was it? Who said that? And
I'm not sure who said it. I'm not sure who said it last night. I'm not sure. I'm not 100% sure.
Amanda says it was a newspaper article. So.
Oh, okay.
Yeah. Okay. Thanks, Amanda.
Dennis Geekus is saying that there's intense rumors in dealing rooms in Athens concerning nationalization of Greek banks to avoid a bail-in. Have you heard about that at all, Stel? Those bail-ins, people don't like them because...
And by the way, Dennis is a Canadian that's living in Greece? Yeah, he's in our chat room too. So he was saying something about that earlier this morning. Have you heard anything about that, Stel?
I have not, no. Although people have been asking me for years now, since the capital controls were introduced and all that. What do I think about the banks and what do I think is going to happen? And I actually said I think it's a 50-50 chance for a bail-in in Greece to happen eventually, because nothing has been fixed. I mean, let's not kid ourselves.
So to people that don't understand what a bail-in is, explain to people what that is.
So basically, it's the taxpayers, so people who have it's exactly like what happened in Cyprus. They picked a floor of funds, and they said anybody who has over 100,000 euros, that was the floor in Cyprus, you get to pay 90% of it. So it's a way of people who have deposits in banks. They lose a part of it, and that gets used to fund the banks, big holes that they have. And my fear is that in Greece, there's not going to be any floor. It's going to start from, very, very low value if this happens. It's not going to be.
Well, I mean, every check that you write me keeps bouncing. So the good news is they're not going to get any money from you. So just kidding.
Yeah.
But yeah, that's that. I mean, could you imagine? I mean, people here in the United States can't even imagine something like that taking place.
Well, they should, Blake, because the law is that your deposits are the bank's, not yours.
Yeah,
That's
I'm just saying. By the way, the euro is under a little bit of pressure here. Like I said, the euro is probably going to start taking out the stops below this 115.30 soon. I think that people got long in Asia, and they're going to find themselves on the wrong side of the market here shortly. So watch the euro as it comes under a little bit of pressure. But I mean, people in the United States and probably Canada as well, and most parts of the world, Stelios, can't even imagine or fathom something that happening. I mean, so for now, you're not your average Greek, and I say that in the nicest of sense. You've got.
Mean I'm handsome and well built. No.
Yes, that true. That is true. But I mean, most Greeks that are not your average citizens, might have their family wealth spread out in different places, right? Not just in Greece.
Yes, that's what we do. And all my friends who have been asking me over the past few years, I always say keep a minimum amount of cash in the bank, just minimum, to cover your monthly expenses, and that's it. You know, any more is at risk. That's been my opinion, and it still is.
Yeah, I mean that's a benefit of yourself who worked, you know, in London for so many years at you know, one of the biggest banks in the world, and you have family members all over. Oh, here goes the euro through the 130. Whoop. See, very easy to read. You know, the euro dollar was just going to start slicing through those stops, and you can see here goes the euro through those stops. But there's you know, people like yourself that that keep their money in different places because the risk is if the Greek banks want to do a bail-in, your money is at risk, right? So
Yeah, absolutely.
Scary. It's scary. It's something that, like I said, most of us don't even think about. So
And you know what else? It's funny because people from let's say from the previous generation to mine, they're used to a world and economy that works in a certain way. They haven't seen this, and okay, we haven't seen it either. But still, it's something that it takes a lot of effort for them to change their attitude. You know, I was telling my father, who used to work in a bank for 30 years, you know, I think this is going to happen. It's a big risk, and I actually had to convince him for that. He would say, "Oh no, I don't think that." He didn't think there was a potential for capital controls either, and they came. So you know, it's you have to be flexible with what's happening and to evolve with the situation, basically.
right. Okay. That's interesting. It's really interesting.
And also, sorry, Joe actually says, isn't there an insurance up to 100,000 euros for each account? Yes, there is, but this is insured by the government, which is broke. So, you know.
It's the same insurance that the government that says, hey, we need everything that's above, you know, a certain amount. We need to bail in. So, yeah, I mean, I guess if the U.S. Went broke, which seems unfathomable and unfathomable, but you know, the thing is the Fed actually controls the money, and that's the one thing about having a central bank that is central versus, you know, European central bank that is not central,
Yes.
right? You know, is that we can just continue to print our own cash. You know, what that does to the dollar ultimately is, you know, is to be seen. That's why the big argument where people like, they can't believe that the dollar is strong. You know, there's so many more facets to monetary policy than just, you know, creating money and, you know, seeing and making it evaporate somehow. But hey, then we could get into the depths and of currencies, which I don't really want to do. I want to actually take a look at some of these charts because, you know, one of the like big failures here is the Kiwi that I'm showing you. The Kiwi, you know, this is a currency pair that, you know, I had high hopes for. Now I haven't, and to my defense, I haven't been playing the Kiwi much or the Aussie. I have played the Aussie yen on the short side quite a bit. I actually have a pattern in play for the Aussie yen because of this failure at the 618. But the Aussie and the Kiwi themselves against the dollar, they're both extremely weak. And look at how the Aussie just failed off of this trend line. We're approaching the 78% retracement. This is actually a very big risk for Australian dollar longs right here, because what you have, and let me show you right here. This is an inverted head and shoulder pattern that never completed. The problem with that is you've got everybody and their mother's brother's uncle that's long. Well, you know, I don't know how many people are long right now, but they're you know, maybe people were long based on, you know, the Aussie being oversold, you know, expecting the U.S. and China trade situation to maybe improve. Anyway, the Aussie, after having an extremely dovish RBA decision just earlier this week, you know, the Aussie is now at risk of blowing out stops below the shoulder, which, you know, you have a lot of stale longs that, you know, this move alone just below the support level here could take us to new trend lows. And I think the risk is that, you know, the Aussie actually drops down towards 71 cents. I have to tell you something regarding Bloomberg. I have something extremely annoying that's happening, and I have not been able to make this adjustment the last few days. I have a sound, and you guys can't hear it, can you? Like a big gong sound. Can you hear it at all, or is it you just hear me?
I heard it in the background just a little bit.
Okay. Just a little bit of a gong sound. Okay, that gong sound, it travels with such, I mean, it's so loud in my ear and in my desktop. I adjusted a sound for this alarm every time I've got a new chat from, you know, these. I'm on chats with different brokers, so I've got Barclays, Citi, JP Morgan. You know, I see their chats from their traders. They, you know, they're chatting all the time. I adjusted my sound to this big gong sound, and I've tried to get rid of it. It won't revert. And it's so annoying. So I'm trying to talk, and whenever I hear that gong sound, I'm trying to talk, and I can't even hear myself speak. It's very difficult to do. Anyway, not a problem of yours. It's more of a problem of mine. But the problem is, Bloomberg's got this bug. And see that gong? I don't. You probably can't hear it, but it's in my ear. Anyway.
We can hear it quite well actually now.
Okay, now you know what I'm talking about. Yeah, so I can't even speak when that happens. Anyway, the Aussie is threatening a breakdown. The Kiwi, you know, we're through this trend line, and this trend line had been very supportive, and being above it was, you know, you were able to pick up little bits and pieces of longs, you know, here and there if you wanted to. But the Kiwi is now threatening, you know, these lows, and you know, if the Kiwi continues to break down, the Aussie continues to break down, okay? And I want to show you two other things. The crude oil market, where's my crude? Okay, so crude completed a wedge pattern. We're at the 618, okay? The longer term 618, right? So let's say the crude oil market, by the way, I should probably do this. Let's, there we go, okay. And guys, if you think that crude's going to break out, I mean, really, we have to break 77. But if crude breaks 77, it's gone. I mean, then we're going like way, you know. And then we're going to be seeing crude at 80, 100, 110. You know, we'll be seeing a lot higher prices in crude. I'm hoping this doesn't happen. By the way, if you want to know what will sink the global economy right now, put crude oil above $100. That will absolutely crush the global economy, crush it, okay, in my opinion. Anyway, and then those of us in the United States, do you guys remember $5 gas? Well, it'll be back again. So that, and then, you know, obviously, if you take Canada and US and you start thinking about or Europe and start thinking what it costs in liters, it's, you know, it's going to get ridiculous. Anyway, we don't want to see that happen. But if crude turns here, what the point I'm trying to make is, if crude turns here and you have the Aussie and the Kiwi showing signs of weakness, what should we all be looking at right now? What do you think, Dale? Stella?
Canada.
Correct. The Canadian, I think, is at risk of filling this gap. Now, let's talk about this for a second. And I'm short some Canadian yen. I'm not long the dollar Canadian. I should be long the dollar CAD. I'm not just yet. I haven't made that decision to get long here, but I do want to get long. I'm thinking I do. There's news that came out last night that the new NAFTA agreement, or the USMCA, may not even go to the legislature for approval before the midterms. Corbyn actually had, I think it's Senator Corbyn actually threw that out last night. That came out as the stock market closed before Asian trade, and it's kind of one of those news stories that went under the radar. But if that gains more traction, the risk of the Canadian dollar losing some strength here after being, God, that gong. I know you guys can't hear it, or barely hear it, man. It drives me batty. Anyway, the risk of it, you know, moving up towards the gap fill is quite high, especially if that news story gains some traction. Then if you got crude that looks like it might peak, you've got the Canadian and the Aussie that look weak. The risk is that the U.S. dollar Canadian might start to squeeze. Also, keep in mind that what other good news are we going to get out of the new NAFTA or the USMCA? Is there anything else? Stelios, am I missing something? Is there something else that may be released?
Not that I know of, no.
Okay, good. All right. So now, isn't the risk of buy the rumor, sell the news quite high? I know everybody's like, well, you know, the Bank of Canada may be, you know, more hawkish in their assessment of the economy versus dovish. That's why it's down where it's at. But didn't we all know that? And didn't we all assume NAFTA was going to get done? And didn't we all assume that NAFTA is going to get done? The Bank of Canada is going to have to be hawkish again. Isn't that the reason why the dollar Canadian's not at 132 and is down at 128? So the risk here is if stocks start to show some weakness, if crude starts to show some weakness, Ziggy's saying it sounds like the gong show. Can you guys hear that? I mean, it's really loud for me. And obviously, I have to actually put this thing in one ear because I can't stand it anymore.
Well, you do have that background ethnically, where you would be, where you know, the Chinese are introduced by a gong being struck, and then they come into the room.
See, it's this stupid sound that plays. Done. Let me see if that does it.
Ziggy is old. He remembers the Gong Show. You know, I went to that show, Zig. Yeah, I was the unknown comic.
Oh, that's it. Here, wait. Maybe I could do this.
Gene the Dancing Machine. How about that, Zig?
That's it. Okay. I think I was adjusting the wrong one. Sorry, I'm sorry, guys. I have to do this. I can't even focus. I can't even focus when this is happening. I can't even finish my thoughts. Hopefully that just made an adjustment, just made a difference. Okay, maybe I was just clicking the wrong thing. Maybe it was a user error, which is typically the problem. You know, we had a lot of people are like, "Hey, Blake, you know, I didn't see a new email for the, you know, European crossover webinar today," and you know, people are like, "Hey, did you look in your junk folder?" And they're like, "Oh, okay, I found it. I'm in." You know, it's like usually it's a user error. It's not, you know. And for me, I'm like calling it a bug, but it's probably more of a user error than anything. Anyway, the risk is, I think, in the U.S. dollar Canadian of actually bouncing back and actually, you know, and really what I'm looking for is right here is if the U.S. dollar Canadian takes out this level, which is 128.85. Let me get rid of this one. 128.85, then that's when the squeeze really starts. I haven't seen any indication of it, and I think we have to see, you know, a move probably above, I would say, you know, right here, which is, it's 28. Whoops, no, that's not what I wanted. Let's get rid of that. 128.50-ish, you know, but once we get above that level, that's where things start to, you know, get a little risky if you're short the dollar Canadian. I think anybody who's short the dollar Canadian probably has inched their stops up to somewhere in this neighborhood. So that would be the risk. So anyway, I just want to talk a little bit about the Canadian. Let's take a look at the Swiss franc. The dollar Swiss, man, this thing is strong. The relative strength intraday is divergent as all get out and a little overbought, but the dollar Swiss has been just on a rampage. And one of the things that, you know, is helped the dollar Swiss move higher or the Swiss franc move lower is, you know, the market's optimism that we're going to be able to get past this Italian budget issue. I think if the Italian budget issue, if you really want to know if it is a bigger problem for the market, the first place you should be looking at is the dollar Swiss, or more importantly, the Euro Swiss. If the Euro Swiss, you know, really starts to show some downside, that's when things start to get a little shaky, I think, for the global equity market. So, you know, I guess we can probably be a little bit more specific as far as technicals go. And the Euro Swiss, and let me get rid of these here. Okay.
That was a nice pitchfork.
I'm not a pitchfork dude. You know,
that's the first time I saw a pitchfork on your chart.
I don't. Well, it wasn't. It wasn't. It was by accident. It wasn't drawn as a pitchfork. Some people, like some people have, like, Andre has a really good eye for harmonics. Grega has a great eye for Elliott waves. There are people that have good eyes for pitchforks. I am not one of those people. I don't. It doesn't register. When people show it to me, I go, oh yeah, I can see it now. But I can't eyeball a chart and see a pitchfork formation.
Yeah, I used to have great eyes for the ladies.
Yeah, you don't anymore though.
I know, but I still remember.
I guess this would be a pitchfork, right? It's not.
Yeah. Ow,
yeah.
man.
See, only reason why I recognize that is because you said something. But for
all right,
it's not. Hey, by the way, I don't think you ever lose the eyes for the ladies. I think the ladies just lost their eyes for you. So
yeah, you don't exist. Yeah.
Yeah, but isn't that true?
No, honest to God, Blake, up until about a week ago they did, and it's all changed. It's
a week ago. Really, it was just a week ago, Dale.
Yeah, it's a dramatic change.
It was just a week. A week.
Yeah.
I think it's been longer than a week. Let's go ask your wife about that.
Oh, she thinks I'm like a Greek god.
Okay. All right. Sorry. Let's get back into the charts.
You know what? You just go to Twitter and you look at my icon there.
Oh God, you're such a stud. It's okay that you have a picture of you in your 30s on Twitter. It's okay, I get it.
Well, it worked.
I know
it worked on Match.com.
Yeah, I'm sure it works on what's the swipe right one that you do? That you do?
Right,
Just
kidding.
Just
kidding.
Okay.
It's all right.
All right. Sorry.
Okay.
Let's. Okay. So hey, I want to go back to the dollar yen a little bit. Let's talk a little bit about the dollar yen. One of the things that that the dollar yen I think is really struggling with here is that you've got I can revisit the old blog post that I did on Friday on the ForexAnalytix side, but really we're struggling here at the 127% extension. I don't want to get too bearish the dollar yen while we're trading above 113.20, which is right here, but a break below 113.20, that's when things get a little bit more shaky for the dollar yen. You can see I've got actually an alarm set for there because I do want to be notified if I happen to be out and about. I've got alarms set on for a couple of different ways. I'm like one of those people that when I go to sleep, I have an alarm that's battery operated. I got my iPhone. I've got my alarm clock that's plugged in. I have alarms that trigger all over the place. So whether you're looking at ForexAnalytix and you've got your support and resistance levels, alarm set at 113, like this is 113.17, like that will trip if that hits, that will trigger a email alert, a text message alert to my phone, and then you get a notification on your desktop, and then I've got an alarm set here which will send me a text message. I've got another alarm that's set on my desktop, so I've got alarms all over the place. So if this thing breaks 113.20 or 113.17 rather, I should be notified no matter what I'm doing, unless I'm happen to be sleeping and have nothing around me. But that's that's how important I think this dollar yen is at this level. And so if we break below there, that's where things are going to get a little bit dicey. Now, one of the things that I'm also paying really close attention to is the 10-year. So the 10-year, which I'm going to talk not just about the 10-year. I'm going to talk about boons here in just a second. The 10-year, as you mentioned, Dale. Short interest. Oh man, this euro. By the way, I shorted the euro yen at 55. The euro yen's breaking down here. I'll get back into that here in a second. If you're in the ForexAnalytix chat room, you guys know I'm short the euro yen. I actually am going to be adding to that here in just a few minutes, I think. But anyway, the 10-year I think is at risk of squeezing. Now, right now it's down, and it's not threat of that. I think what we have to be looking for is we have to look for a push above 119, and we press above 119, and this is where the squeeze starts. And then you start looking at a bigger double bottom in the 10-year, and then, you know, obviously I'm going to get way ahead of myself here, but if we break like this, I didn't draw that too well, but that downtrend line, that's when we really start to squeeze. But I want to be prepared for that, meaning that, you know, for myself, I'm willing to be a long bond market trader right there on the 10-year, which if you want to translate that to FX, if you guys don't trade futures, you don't trade bonds, that means the dollar yen breaks through this right here, this breach of 119 means the dollar yen breaks below 113.20. Those two should coincide. So in other words, if the dollar yen's breaking through 113.20 or close to, or just broke, then that means you should probably look at the 10-year and just make sure it's breaking above 119, or vice versa. If the 10-year breaks above 119, the euro hasn't, or the dollar yen hasn't broken below 113.20, chances are it's going to. So I think that so let me just reiterate, and let me show you what I mean. I just want to be very specific here. Okay, what that means, where is it? And let me grab a better pen, because the pen is not so, the pen is blue. Goddamn pen is blue. It's blue, it's blue, it's blue. I'm just kidding. I love Liar Liar. Don't you, Stelios? Like, if I can make Stelios laugh, that just made my day. Okay, so right here, if the 10-year breaks this level, right, that means the dollar yen is going to break this level. Those should coincide with one another. So why am I telling you this? Well, it's correlations, right? So, and this can give you a lead indicator on something that's going to happen or might happen. So, if you're watching the bond, like let's say you don't have dollar yen, you don't have the 10-year, but you trade them both, okay? Like I do, okay? You don't have either or, but the dollar yen breaks through 113.17, 113.20, and you're not long bonds, then you should be looking at getting long bonds. Or if the 10-year breaks above 119.02, which is, you know, this level right here, okay, and the dollar yen hasn't broken through 113.20 yet, then you look to short the dollar yen. It's you know, you can sit here and ask me all day long, you know, is this going to be the chicken or the egg? You know, who's going to be the leader? I don't know. I don't really care either. You know, I'm here to take advantage of that arbitrage opportunity, if you will. So that's what I'm looking at with the bonds and the yen. Does that make sense to everybody? If you're listening in, did that make sense? Yes, no, maybe so. Nobody? Bueller.
Well,
Okay.
From the day of the Fed, Blake, the yen led it, because the yen's been making new highs while yields came off.
Yeah, but I'm not going to come in the market with that assumption, because, you know, equities are, look, the S&P futures are at highs, Nasdaq's at highs. Maybe it's the yen. You know, every yen trader may be looking at risk where they're not looking at the bond market. You know, they're looking at risk. So I'm not going to assume that it's one leading the other. I'm just going to let the market decide which way it is.
Yeah. Okay.
So anyway,
just an observation.
Jack said, sorry, I missed that, Blake. Could you repeat? Because just kidding.
Have a cup of decaf.
Jack's being an asshat. So
Decaf, Blake.
I should drink more decaf. I drink way too much coffee in the morning. All right. So anyway, that's the 10-year. That's the yen. Oh, I wanted to talk about boons. So for those of you that trade boons, which I don't. It's not something that I'm, you know, but I like to look at it. I think I like to look at it because I think it gives us a nice lead. We're not nice lead, but it also gives me nice confirmation on what I feel about the bond market. So the boons, if you don't know this is a huge consolidation. I mean, like ridiculous. And you know, you got the 10-year that's been, you know, selling off quite aggressively over the last couple of years. The boons haven't. I mean, they've corrected a little bit, but they really haven't gone down a whole lot. But this is one of those situations where, you know, if people have been watching the U.S. Treasury market under pressure. I mean, we've seen that the 10-year retrace 50% of its move over the course of the last, year and a half, over the last 10 years or whatever. It's like a 50% retracement. The boons have barely corrected, but Europeans may be short bonds. And fact of the matter is if there's a little bit more risk, if there's a little bit more risk in the the Italian market or whatever, that you might have Europeans looking at boons is more of a safe haven type of trade. Well, the thing is the boon market's been holding really key support here, and so I think we are right at the 200-day moving average. So if the 10-year starts to catch a bid, boons might as well. So this might be something that if you do trade, if you're in Europe, or you're in the UK somewhere or whatever, wherever you're at, and you trade boons, I think you should need to pay attention to this too. If 10-year yields start to drop and the bond market starts to rally. Now, I was going to talk a little bit about the euro yen. One of the guys, and by the way, here in the next, I need to schedule this. I just haven't had it. I might actually call him today. I talked to him yesterday. I'll talk to him today. One of the probably most iconic FX traders ever in the history of FX is a very, very dear friend of mine, and his name's Ronnie, and I'm going to bring him on as an interview. He agreed to do an interview with me here in the sometime this fall, and so I'm going to have him here on the FACE webinar. You guys, I hope you love him. He's from Switzerland. He's awesome. Very, very dear friend of mine. Anyway, I was talking to him yesterday, and he doesn't think that the euro yen is going to see above 132 for the remainder of the year. So in other words, he thinks that this the euro yen's pretty much done. He thinks that the Italian debt crisis is going to pick up some steam. Now, I don't have that type of foresight. I can't, I have a hard time. I always try to explain to people, I have a hard time figuring out what's going to happen 15 minutes from now, let alone what's going to happen 3 months from now or a month from now. So if you try to get me to give you some sort of long-term forecast, unless I can't see it, if I can see it on a chart, I'll tell you, but if I can't, there's so many variables and I'm not smart enough to figure all that out. So I don't pretend that I know. So, there's a lot of people that will tell you, oh, the euro yen is going to go up to here and then it's going to drop down to here and it's going to go over here. And but he's one of those people that happens to have the foresight because he talks to a lot of extremely wealthy people all the time. So, but he really doesn't think that the euro yen is going to go much higher based on the structure of the euro and also the yen and the bond market and that type of thing. So the euro yen, bottom line I wanted to point out here is the euro yen actually came into a really big confluence of this 161% extension of this move. We didn't complete this flag, which is technically that's a bearish thing because you got the entire market really bullish. MB says, "Oh my God, Ronnie, yes he is, MB." And I'll tell you what, MB, I'll threaten to bring you on too. MB, I'd love to have you on at some point. So this move right here, okay, technically speaking, what you had is you had everybody long the euro yen without completing the flag. Now, when you fail to complete a flag, then that leaves suckers long. A lot of people long right here expecting more. Unfortunately, you've reversed. Now, if you blow out through this 130.50 level, below 130.50, this is where all the stops are. All the stops are right here. Okay, so if the euro yen, for me, I really want to add below 130.50. I'll probably add before then, but this is where I want to get aggressive. Okay, right through here, through 130.50, because this is a complete failure of a flag pattern. Okay, so you have a failure of a flag pattern, breakthrough support. This is when things start to go cattywampus on the euro yen, and this is where we break through 130.50 and we get a foothold below 130. This is where I start looking at man, that was such a big failure. I don't know if we're going to see back above 130, going into the end of the year, because this is going to be a massive failure. So this is what I'm watching very, very carefully. Now, what has to happen in order for the euro yen to turn like that, aggressively like that? We're going to have to see a reversal in risk. We're going to have to see a reversal in some of these big, like the S&P. If the S&P, starts to break below 129 or 129, excuse me, 2,900. That's where things get a little shaky going into the end of the year. And if that happens, the euro yen's breaking through 130, then I'll start looking at the euro yen saying, I think we put in a top for, the immediate term. Okay. Right now it's a little, you can see what these headlines like last night. I mean, last night's headline spiked us up from, 130, 120 to almost 132 before reversing. So, I think there's a lot of variables out there, but if the euro yen drops below 130.50, it's so broken from a price structure perspective, the risk is now going to be lower. And again, if we have bonds stronger, we have stocks weaker, which obviously stocks are not weaker at this moment, then that's going to feed into a weaker euro yen. So that's just something that I'm paying very, very close attention to. I am short. I got short at 131.55. I am looking to add. I'm not going to add. I don't add in the hole or add as we're dropping. I'll probably wait for some sort of bounce back to 130.150 to add some more if I can get it. One last thing I think I will talk about, and then we'll answer a few questions. And by the way, if you're wondering where Steve is at, Steve is going to be out for the next couple of days. Stelios, Steve's boss, told him to take a few days off, so he's doing a little R&R right now. But anyway, but he'll be back on Monday full steam. The dollar index this is a really important resistance. If you can't tell the reason why the dollar index is so important, it's because of this. How many people do you know, and whether it's people that you follow on Twitter, it's your grandma, it's your mother's brother's uncle's nephew, your uncle's brother's nephew's uncle's monkey, pet monkey? How many people do you know that are looking at the dollar index and thinking, wow, there's a big head and shoulder pattern? Everybody, right? The point I'm trying to make is everybody thinks that this is a big dollar index head and shoulder pattern. Well, I'll tell you what, it ain't no head and shoulder pattern if we break above that 618 right there. And so if you're short the dollar index, because remember, and I'm not pointing at you specifically, you that are listening in, but I'm going to point my finger at everybody that responded to me a week and a half or 2 weeks ago on Twitter, that I said, hey, if the euro stops at the 38% retracement, which was 118, I said if it stops at the 38% retracement, then you have to be careful of a full-on reversal, meaning the euro is going a lot lower. Everybody's like, well, euro's going to 120, it's going to 122, blah, 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 blah. Everybody that believes that the euro is going to 120 is going to be wrong right here. And that's the risk of the dollar index. Look, I'm kind of indifferent here. I'm not a huge dollar bull. I'm not a huge dollar bear. I think the dollar yen, can sell off. But the dollar yen doesn't factor into my dollar index thinking. I really don't know if the euro is going to be at 120 or if it's going to be at 110. But I do believe that the dollar index, if it does break this, let's just call it 96, we're going higher. And that means the euro's below 115 and change. We're probably going back towards 110. And can that happen? In the face of a trade war, yes, it can. Okay, in the face of a trade war, conventional wisdom would tell you that the dollar is going to strengthen, generally speaking. And so if this trade war continues to intensify between Europe, which, by the way, Europe is in the United States' crosshair if you haven't figured that one out. The days of the last 30 years of Americans enjoying cheap Mercedes-Benz and cheap BMWs, I think that era is coming to an end, especially if Donald Trump stays in office another 4 years on top of the next 2. We're going to see European imports become quite expensive. All right, and the dollar is likely to rally in face of that, and you sprinkle in a little risk aversion and a little selling of buying a yen and buying a dollar at the same time, which means the euro yen, Aussie yen, New Zealand yen, all those yen pairs continue to roll over. The dollar strengthens in that type of environment. It's not like stocks aren't at all-time highs; they are. So if stocks are at all-time highs and they start to roll over, the yen may be a beneficiary. The dollar may be a beneficiary, and this dollar index will go a lot higher than it currently is. So I don't think it's wise to write off the dollar index. I don't think, I don't think it is, and because I can make an argument for either direction. I can make an argument for dollar strength. I can make an argument for dollar weakness. It's usually when I have conviction about the dollar where I can say, okay, the dollar is going higher because of this, that, this, that, this, that. It's going lower because, well, it's just not. So that's when I'm really confident, and I'm sure you're going to hear those arguments in the event that the dollar breaks through 96. So for those of you that are non-believers of the dollar, I've got my hand half raised. If you're a non-believer of the dollar, you need to be careful here. Okay. All right, Dale. I know I talked quite a bit this morning, and I talked more than normal because Steve won't be here for the next couple of days. So I'm trying to get my vocal cords in order. What else? You have your interview coming on here in just a second, right?
Yeah, it's like riding a bike. Alec Jane is here, so
okay, great.
Anytime.
No, Jane wanted to say the U.S. dollar, Indian rupee. I mean, I can look at it. This is not a currency pair that I trade, so this is going to be I'm going to look at it and give you a very unbiased opinion at this point. And because you know what I'm going to tell you is everybody's trying to fade this. Everybody's been trying to fade. But this has been the same story for the last. Fade meaning shorted. Everybody's trying to buy the rupee right now. My only question to you would be why, because it doesn't look like it's going lower. Now, I mean, it probably will go lower in the near term. I'm just talking longer term. Hold on really quick.
I think it would have to get back under 70 or 68 for there to be at least the first signs of a topping put in.
Yeah, I mean, this is a weekly chart, and if you look at even the weekly relative strength, I mean, we've been higher than where we're at. I mean, you can say, well, it's so overbought. Yeah, it can be overbought, or it can be more overbought or earnest, right? Yep.
Yeah.
I'm making up words
like
right
the
now.
Like the market.
Yeah, I mean, it's like, why can't we extend ourselves to 77.50? Not saying that it's going up there, but and I wouldn't want to be shorted. How about that? You know what I mean? Okay. All right. But at the same time, it's like I wouldn't buy it, but I sure as hell wouldn't short it. I don't like buying things as they're ripping like this. I like to be on the flip side, selling what I own, but trying to short it, I don't know. That seems dangerous to me. All right. Stelios, it's been real. Hey, can you tell your employee Steve that he can have another couple of days off?
Okay. I just want him to be back to 100%.
I know. We just want him to feel better. He's a little under the weather right now. And Dale, I hope you have a great interview. Thanks for everybody listening in. Remember, don't forget to visit our sponsor. That's Forest Park FX. Click on the reimbursement page of our website to get their contact information. It's right here, their Skype, their email. If you guys don't get cash back on your Forex currency trades, you should contact them. And if you want ForexAnalytix for free through your trading, you should contact them. So make sure you contact Forest Park FX. And thanks everybody for tuning in, and thanks for tuning into the European crossover this morning with Paul Franco. It's great.
Good hunting, Blake.
Thanks, you guys. Have a great day.
Okay. Hi, Alok, I see you. I'm going to pass you the controls. Thank you still. And looking forward to meeting you, first of all. So there you go. Waiting to see your screen and hear your voice.
Can you hear me?
I could hear you very clear. Nice to meet you.
Good morning, Dale.
Oh, very nice to meet you, Alok. I want to say thank you in advance for you taking some time out of your day to talk to us. What grabbed me was your hand. Oh, thank you. What grabbed me was your handle, weekend investing, because I think it's on the weekends where you lay out your strategy. In the old days, on the kitchen table with your chart books and everything, and you knew what you were going to do next week. You had a plan. You weren't analyzing the market on the fly. You were executing what you planned. So am I correct to assume that weekendinvesting.com is about not spending 8 hours a day in front of your platform? And
Absolutely.
Okay.
Absolutely. So basically, the idea after 20 years in the market as a broking member, I moved from a broking member to being an advisor, and the idea was to get some more time for myself and to devise strategies which didn't have me, look into the screen 24 hours a day.
Right.
So I designed certain strategies which only required me an action point of 15 minutes once a week, and hence the name, weekend investing.
Wow.
So once a week investing.
Okay, and is it one instrument, or you screen a few to give you that one idea?
So basically, our advisory is looking into the Indian individual stock market.
Individual. Not just the Nifty.
Not just the Nifty, the individual stocks as well. Yes.
Okay.
And
so
yeah, so essentially we try to have different products based on different segmentation in the market. Like there are products which are catering to large cap stocks. There are products which are catering to small cap stocks. And then on each of them, we basically run our momentum strategy and take a decision or an opinion or a you can say a portfolio update once a week on a Friday just before the close.
Okay. Are there any other ingredients in your, I assume, proprietary model or algo besides what were you saying? Besides relative strength? Yeah.
So essentially, a momentum investing, as you know, can be done on a relative momentum basis or even an absolute momentum basis.
Okay.
So when you try to combine these two, you can create all kinds of variations. So the traditional way of doing momentum investing is to do a rotational momentum, where you are picking up, say the top 10% stocks from whatever group you're selecting, and then a month later or a quarter later you'll select the top 10% again and let go of the ones which are not in the top list anymore.
Okay. So when momentum shifts, Alok, does this include shorting candidates for when the market is in a corrective period?
So one could do that. We do only long only momentum.
Okay.
But there are people worldwide who do long and short momentum as well. Okay.
Can you have any examples you brought with you to kind of show some of the markets that you look at, and some of the, I'd love to see some individual charts in India. And go ahead. Okay, beautiful.
So let me, in fact, I was just looking at the Dixie, just like you were, your guest was mentioning, and I had the exact same feeling that once this top shoulder breaks, this is going to go like a rocket upset. And so this was just a side on the side. I do trade on my own account, but that's not what we do as an advisory. So for instance, if you see some charts in the last especially 5 years, 5 to 6 years, Indian stock market has really taken off.
Right.
And the growth prospects have been great, and especially in the small cap, mid cap.
Is that changing because of the, rupee currency crisis, the devaluation of the rupee?
Well, right now, definitely there's a currency crisis of some sorts, and with India being a net crude oil importer, and the Brent being at $85, right where it is right now.
Yeah.
So that and the US dollar impact is crushing the country's finances, and then there's a very important national election that is coming up within the next 7 months.
Are you seeing people in your country gravitating towards crypto as their currency remains under pressure?
So crypto was an interesting case in India, since the regulator in India refused to recognize that as a legitimate asset class.
Okay.
And they kind of stopped in between legitimizing it or banning it. So it was neither here nor there. And
you really have a draconian type government. I hope you don't take offense of it, but I mean, we have members that are from India, and they can only trade 3 currency pairs. And now they're saying, Bitcoin's illegitimate. It sounds like a lot of your freedoms as far as what even to invest in have been eroded by Modi.
Well, I wouldn't say the Modi government has eroded that, but the change has been very gradual, and the legacy issues that we've had for the last several decades, that probably will take a lot of time to get into a rapid growth phase or a policy change phase. I think the current government is doing a lot of change, but India is like a mammoth.
How about eliminating the higher denominated rupees? Do you think that possibly could have led to the confidence crisis in the rupee now, that there was that made certain denomination notes illegal, couldn't be used, and India being known for a cash and carry type of economy, that this could have changed the velocity of money changing hands, and that could have been the cause of why the rupee is in a crisis now? Do you think that's a possibility?
I don't think that there would be a direct link between the demonetization, which happened in December 2016, and the rupee move, which is now more or less.
That was Modi's Merry Christmas gift.
Yeah. I mean, that was quite a shocker. And then post that, there was a tax regime change. So the entire country moved to a GST, the general sales tax, and goods and services tax. And that caused a lot of disruption in the industry, because everybody had to change from the original ways of working, and the informal industry had to move immediately into an organized way, and some did and some did not. So there has been disruption in the way of working for the last few years, and the government sort of says that this is essential to move us forward, to take these bitter pills right now. So that is to be seen whether these changes will actually bring the impact that they were supposed to bring.
So based upon buying precious metals, not in dollar terms, but in rupee terms, that is also your country has a tradition for being accumulators of precious metals. So that saved a lot of people's butts if they were doing it, 6 months ago.
Yeah, India
in dollar
likewise,
terms, it hasn't done much, but in rupee terms, it's probably been a home run ball.
Yeah, I wouldn't say it has been a home run, but since 2011, since when the...
Can't you agree with me on anything? I'm just kidding. All right.
Gold peaked out in USD in I think 2011.
Yes.
When it went to 1920 or 1930.
Right. Exactly.
And in Indian rupee terms, it has been lingering around. I wouldn't say it's a home run, but it hasn't dropped.
Okay. So at least it's been a store of value for Indians.
It has been a store of value. And a large part of India is still unbanked. I mean, people don't have access to financial bank accounts, or they are not literate enough to, invest anywhere else. So gold has been the traditional mode of saving for the rural economy, especially.
And they don't put it in a bank, they bury it somewhere.
Yeah, I mean, the bank is nowhere to be seen. I mean,
Right. Okay, so so they're unbanked and they can't use crypto. Is
that's
that
true.
what? Okay, so let's get back to the gold. I see you follow it. You even, remembered the peak and the year. We've been in a pretty serious bear trend for a while, but there's been a heartbeat recently. Got about $24 pop in gold in the last couple weeks. Silver's rallied about 80 cents or so. Do you think that's just another flash in the pan bear market rally, or that this one might have more legs? Because if you're, it's hard for people to get bullish metals if they're also bullish a dollar. And I've seen both go higher together.
Yeah, but of late, I think in the last many years, both going up has not been the norm.
Right.
And it just seems that there is no life in the precious metal charts. I mean, besides the 2016 move that we saw here.
Right.
I mean, for the last 7 years, I mean, there has been nothing.
But isn't that the time to consider a probe? I mean, we're approaching, and I do think that we'll get to.
People who want to gradually buy in, I mean, probably this is the best time. But for making a positional bet, I'm not sure if we have seen enough evidence that this is turning up.
Okay, fair enough. What else is on your radar?
So essentially, all our products and systems are automated. So there's not much of discretionary decisions to be taken.
Okay, why don't we go to your website?
Okay.
And you could show people what your services are.
So this is the website, weekendinvesting.com. And what we do here is that these are, let me just give you a bigger resolution of this if I have it. One sec. So this is what we've done since we've launched this advisory, which was about 2.5 years ago. These are various products that we have, say a small cap product and a mid cap product and a large cap product. And then we have a small and a mid cap mixed product and some other products as well. So what we saw that in the last about 3 years, we've seen 2 very good years in India. So the index, the main index, the Nifty, moved about 18% 2 years back, and last year it did about 10%. And all our products actually beat the indices in all these periods. Momentum per se has been studied vastly, both in academics and in practical, practice. And they've always found that it is a premier anomaly. So while it remains unexplained why the excess returns are there, but they do exist. And in India, especially, there was a study. Let me just get to the study. There was a study here where they saw that a lot of the returns from the Indian index actually come in a pre-earning seasons segment. So what that means is that there's a lot of maybe front running which happens in the market. So results get discounted even before they are announced to a large extent, versus in the S&P 500, the contribution of the pre-earning season is only 19%. So the price discounting, whatever earnings are coming out or whatever activity is happening in those companies is happening much earlier in India. It could be because of system leakages, or I don't know what the reason is, but the momentum is capturing the essence of the earnings move much earlier here, and hence if you are running a momentum strategy, it is more successful. Even Morgan Stanley has done a study on the Indian market, and here you can see that over a about a 20-22 year period, momentum has vastly beaten all other types of performances in the market, even the growth investing or the value, of course, in India, the value investing from a traditional point of view has not worked, because we are an expensive market, and on the traditional price earning, price to book, price earnings, or those kind of ratios, it is not a very successful market in my opinion.
Okay. So can anyone use your product anywhere on the planet?
So we've not yet fully tested our products on data outside India.
Okay.
But the next phase of research is going to be the US market, and preliminary tests show that the strategies work there as well. So maybe the last 10 years of data I've used, and I've seen that our strategies come close to the index. They haven't really beaten the S&P 500. So, but they come close to that. Yeah.
Okay.
So essentially, what people do is they take up the advisory, and they are able to run these strategies in their own accounts by themselves. So we don't really manage money for anybody, but once a week
they pay a monthly fee for the software.
Yeah, so there is really no software involved. We share the model portfolio on a Google Sheet.
Okay. All right.
And once a week they get a email from the server for the portfolio update, and and yes, they pay annual fees for the service.
Okay. Anything you'd like to wrap it with? Yeah, I want to congratulate you on your success of your, you know, I never saw a study like this of how momentum is really #1 performing methodology. I have noticed that value investors are very frustrated here in the U.S. So appreciate you teaching us all about what we should be paying attention to more is momentum.
So what I would like to say that, you know, in terms of what I call a gain is to pain ratio. I mean, these strategies which are, you know, low in activity. I mean, there's very low, you know, number of transactions a year.
Right.
But at the same time, they are tactical allocation in nature. So basically, when the market starts to crash, the strategies will get you out of stocks and sit in bonds. So to that extent, you have a parachute of safety. So you know you are getting the upside when it happens, but on the downside you are protected to some extent. So if you keep doing that, it kind of, you know, compounds over time, and then you can sort of you know, get your expected you know, benchmark beating returns in the market. So the rule-based system essentially you know, gets the emotions out of the way. So the behavior part of your investing or trading, that gets taken care of because an external advisor is giving you an advice. And usually what happens is that if you are paying for a service, and however simple that service may be, you tend to follow it, you know, and you have confidence, you know, that somebody else who's had 20-25 years of experience is probably going to hold my hand while the time is rough. So that kind of confidence and that kind of you know, handholding can make you pass through those tough times. Like currently, that in India we are going through a reasonably bad patch, in the sense that the broader indices are down, you know, maybe the small cap index is down 38%. The large cap index is also down about 10%. So people have not seen this kind of falls in the last, you know, 5 to 7 years. The great crash was probably the last time we saw such drops. So for these stressful periods, you need to have a strategy in place, you know, a plan which has proper portfolio allocation and exit and entry decision points which are clear, and, you know, which are not vague as to, you know, what should I do now, when should I exit, when should I add, so on and so forth.
What has been your worst drawdown?
So the worst drawdown that we've had is around 30 to 32%.
Okay.
In the larger and mid cap products. In the small cap products,
it
has been shorter. Yeah.
It's a lot of fun, isn't it, to live through that?
Yeah, I mean it's stressful, but on the flip side, I mean if you've seen 50%, 100% type of returns, then
Right.
I mean that's part of the game then.
You're right. You know, I can tell after talking to somebody if they know. And I could tell you're a professional. I think you put a lot of time and thought into what you're offering to the public. And
Thank you.
if anyone is in India to take advantage of this, I recommend that they go to get in touch with Alok at weekendinvesting.com, learn about the power of momentum. Could follow him at Weekend Investing on Twitter. And really a pleasure meeting you, and appreciate that. And it was a pearl seeing how momentum strategies outperformed everything else.
Pleasure is all mine. It was wonderful to talk to you.
So, you know, I wish you good fortune, and that money or whatever the Indian government lets you have or can keep rain down on top of you and all of your clients. And you are now, like it or not, Alok, you're my trading warrior brother. You're my trading warrior brother now.
Thank you. You too. Thank you.
All right, everybody,
Okay,
that's Alok Jain. And hope everyone had a good day. And remember, don't just count your pips, count your blessings. See everyone for investing.com Thursday. Don't forget you could sign up for a $1 trial. If you don't like it, I'll mail you $1. And that's a wrap for me. You're very welcome, Marius. See everyone tomorrow. Good hunting the rest of the day. Remember, private chat. All the action junkies are in there. Become a member and join them. Adios.